So this one is going to be a video in regards to preparing the financial statements of Bob Consulting Company, given the analysis that occurred in the accounting equation. So just to recap on the financial statements here, we have the income statement. The income statement, also known as the P&L statement or profit and loss statement, displays the company's revenues and expense accounts. So if revenues are greater than the expenses, then the company would have generated a net income. But if it was the other way around, where expenses are greater than revenues, then the company would be operating at a net loss. Okay, so that's the income statement there. Then the next one, we have the statement of owner's equity. That's going to show you a few a few components, as you can see here. The beginning capital balance, which is usually carried over from the previous period into the new period. Then you have an addition of the owner contributions. This is when an owner contributes cash, equipment, inventory, resources into the business. Then you have the net income that comes from the income statement. So based on how the business is doing, hopefully it is a net income that results in the business's operations. So that's an addition. Then we have subtraction of owner withdrawals, when an owner comes in and decides to take out, something that's going to decrease the equity in the of the business, will be a reduction in equity. Okay, so this is where you have the ending capital balance. So that's what's shown in the statement of owner's equity. Then we have the balance sheet. So the balance sheet is going to show your assets, liabilities, and equity. Excuse me. Which is pretty much the same as the accounting equation. So the balance sheet, again, it shows the company's current financial health, their current financial position. Then you have the statement of cash flows. That shows cash inflows and outflows. And it shows the inflows and outflows in three different sections: operating activity section, investing, and then financing. So the first thing I'm going to do is prepare Bob Consulting Company's income statement. Okay, so I'll put it over here. As Bob income statement or income statement. So now when it comes to the income statement, we know that we are going to have revenue accounts in there and also expense accounts in there. All right, so this is going to be displayed in the income statement. All right, so now we just got to prepare it. Now, the first thing that is displayed in the income statement are the revenue accounts. So I'm going to put on here revenues. All right, so we see here the revenue sections. We see there are two transactions for $50,000 and $60,000. So the total was $110,000, but we need to know what type of accounts were used for this $50,000 and $60,000. We know that they're revenues, but what are they? So I'm going to go back up here to the scenario for transaction 4 and transaction 6. Okay, 4 and 6. So 4, I'll zoom in here. This shows that the company performed services to a client. So that tells me that this is a service revenue. That's the account that I'm going to use. So let me zoom out here. And I'm going to put in service revenue. Oops. I know I didn't spell it like that. Come on now. There we go. Service revenue. All right. Now for the next transaction, 60,000. Let's see what that's for. Okay, so this is also, if you look at here, it says Bob's Consulting Company performed services to a client. So this also was a service that was performed. So this will be lumped into the service revenue account as well. So it's going to one account, so we don't need to display it twice in the income statement. So I'm just pretty much going to take the 50,000 plus 60,000 to get our 110,000 here, right next to, service revenue. All right, this is 110. So that's it. We got all of the revenue accounts. Now we're going to bring in our expenses. Okay, it looks like we got three different type expenses here. So we got to figure out what type of expenses, just like we did for the revenue. So for transaction 2, I see $2,000, and let's see what that's for. Zoom in. So this was for rent. So the company paid $2,000 for rent for the month. Okay, since this is rent, it is an expense. The account that I'm going to use is going to be rent expense. So bring it down here, rent expense. Okay, and it's going to be for 2,000. All right, the next transaction occurred on, let's see, it was for transaction 5 for 2,000 as well. Let's see what type of expense that is. So the company paid salaries of 2,000. So this is going to be salaries expense. So that's the account that I'm going to use. Salaries expense. It's for 2,000. Okay, so now we got our last expense here, and it's for 300, and it's from transaction 7. And transaction 7 here is for utilities. So, I'm going to call this utilities expense. And this is for $300. Okay, awesome. So our total expenses should match what's shown here in the accounting equation. 4,300. Right? So now to figure out the company's net income, well, we can clearly see the revenues is greater than expenses. So that's good. It is a net income. So the net income is going to be 110,000 minus 4,300, and that's going to give us $105,700. That's our net income. So that's great. That's awesome. So this is our first financial statement here that was prepared. It shows how the company performed. Now the next one is going to be statement of owners equity. My iPad, it sounds like or my laptop, it's kind of giving up on me, but I'm not going to give up on it. So statement of owners equity. This is going to consist of our beginning capital balance. I'll remember the 4 components here, or the components. Beginning capital balance, and that was 0 because the capital balance is carried over from the previous period. We don't even know what happened in the previous period. Okay, so we're just going to go ahead with 0. Next thing we're going to do is that we're going to add owner contributions. Owner contributions. All right, so we scroll over here to the accounting equation. Underneath equity, owner contributions here, I'll zoom in. It's pretty much the same as owner capital as far as with the account name. All right, so at least I'm going to use it that way. So then $50,000 is what's shown in the owner capital account. Let's see, 50,000. There we go. All right. Next account, or the next thing we're going to put in here in the statement of owners equity is going to be your net income. All right. This is based on how the company performed. So that performance is going to be included in the statement of owners equity. So what I'm going to do is kind of just draw a little arrow there, just letting you know that this net income here that is going to be shown in the statement of owners equity is coming from the income statement. So this is going to be a plus 105,700. Okay, so let me add these amounts up. So that's 700, 551. Okay, so $155,700. Then we're going to subtract out the owner withdrawals. And we scroll back over here, the owner withdrawals right here came out to be 1,000. So this is going to be a subtraction of 1,000. So to get our ending capital balance, it is $154,700. Okay, and that's what that's what's going to be shown in this statement here. Okay, now we got the balance sheet. The balance sheet is going to show us our assets, liabilities, and equity. Okay, so our assets that we have here, I already kind of know it by heart, but I will scroll back over there, are cash, supplies, and equipment. All right, so let's see, equipment. All right, so cash came out to be 124. Let me zoom in so you can see this. 124,200. Equipment came out to be 30,000. Office supplies came out to be 500. So I got to see if I can remember that. All right, cash was 124,200. Supplies was 500, and equipment was 30,000. I think I was right now. I can use office supplies or supplies as the account name. It doesn't matter. Just know that it is an asset. And see, let me just double check and make sure. Yeah, I did remember this correctly. All right. So before I move on, I want to talk about the presentation of this that you see here on the balance sheet. So just like the presentation in the income statement where the revenues come first, then expenses come next, same with the balance sheet. The balance sheet has there's a certain order that the asset needs to be displayed in, or that the accounts needs to be displayed in. So I'm not going to go over too much in this video, but I will do a video where I explain the order and why that is the case, that it's in a specific order. But just know cash goes first. With these three accounts, cash goes first. Second is supplies. Third is equipment. All right. So when we put these together, total assets, let's see, 700 and 154 comes out to be $154,700. So this means that our liabilities plus equity combined needs to be that same amount. So liabilities, we scroll over here. We don't have any liabilities. It was just zero the whole time. We're good there. No liabilities. So I'm just going to put on here just zero. Okay, so for equity, we're going to pretty much display the capital balance. Owner capital. All right. So the capital balance is going to come from, yes, the statement of owner's equity. Which is going to be 154,700. So if if doing this right, as far as with display, liabilities will come over here. The 154,700 will come over here because this is the capital balance here. Okay, this is the capital balance. And so when you bring it down or adding the liabilities to the equity accounts, you'll get $154,700 down here. Okay, so we know that these do balance each other out. The next one here. Oh no, let me go ahead and just put a box over this. So you know this is a statement that's showing us a company's financial health. All right. So the next one and last one is statement of cash flows. I know this is a long video, but stay with me. So statement of cash flows consists of, let me go back so we can get a little recap here. The cash inflows and outflows in the operating, investing, and financing activity sections. So the statement of cash flow that I'm going to put together, it's going to be a simple one. It's going to be very simplistic just because the statement of cash flows is actually very complex. And you need to know a lot of accounting. You need to know a lot of different accounting topics before even tackling the statement of cash flows. So it's just very complex. Each company, I mean, you can go online right now and look at financial statements for public companies. You can go in there and actually look and see what their statement of cash flows look like. And even I'm sometimes kind of flabbergasted by it, of how many transactions there are in there, and just how complex the statement of cash flows is. And each company, it's kind of displayed differently. So the wording of it, of the the different accounts and everything, you have to try to figure out, okay, is this an addition or a subtraction? So pretty much what I'm saying is there's a lot more convoluted, I want to say, activities that is in the statement of cash flows than what I'm going to present to you right now. So I'm going to just keep it simple again. So the first, though, because this does have a proper order that it needs to be displayed in, are the three sections. So the first one is going to be your operating activity section. So that's the first one that needs to be displayed. All right. So all the operating activity sections come from like cash collected from customers, cash spent on inventory, cash paid to employees, so salaries, little things like that. Cash paid for rent, cash paid for utilities. These are expenditures and also cash that you pretty much just need to have to operate the business on a regular basis. So we're going to start with the cash collected from customers. There we go. Cash collected from customers. Okay, cash collected from customers. I just scroll over here. I got to now go back to both the accounting equation and also the transactions here to figure out all of my cash that was collected from customers. I only need that. So I see some addition of cash here. Transaction 1 is 20,000. Transaction 4 is 50,000, and then transaction 6 is 60,000. So these are all increases, but I need to know what they were for. So transaction 1, 4, and 6 is what I'm looking for. Okay, so for transaction 1, so this is when Bob contributed cash into the business of 20,000. So this is not considered cash collected from customers. So I go to transaction 4. The company performed services to a client for $50K for cash. So this is a customer. This is a cash collection from a customer or client, same thing. So that's 50,000, and then we got transaction 6. Same thing. Bob performed services to a client for 60,000. So that was for services performed, and we got cash for it. Okay, so we are only going to, let's see. We're going to only bring in the 50,000 and the 60,000 over here to cash collected from customers. So when we add those two together, that should give us 110,000. Hopefully I'm 50 plus 60. Okay, just making sure my math is right. So it's $110,000. I'll put on there the amount or balance. Okay. So great. We knocked 2 out of the way, and now we have other amounts that we need to tackle. So all of these negative amounts, we need to take a look at all of these. Okay, so transaction 2. Transaction 2, it says cash paid for rent, 2,000. Yes. So that's going to come with us underneath the operating activity section. So cash paid for rent, and that was for $2,000. I'm gonna put a bracket here. I normally use brackets for minus sign, so I'm gonna start doing that. Cash paid for rent. Okay, what else? I'll just do it this way. We'll just go by one by one transaction. So Bob's Consulting Company bought office supplies for $500. Okay, so yes, the purchase of office supplies, it was for cash or by cash, and it was $500. So yeah, that's going to be a reduction in the cash statement of cash flow. If this will allow me to scroll over. There we go. So cash paid for supplies. It's $500. So it's going to be a minus 500 because it's only focused on cash collected and cash paid. That's it. Okay. Transaction 4. That was the cash that was collected by the client. So that's already included. Bob's Consulting Company paid salaries of $2,000. Okay, there we go. Cash was paid for salaries. So that's going to be underneath the operating activity section. So cash paid for salaries. And it'd be for $2,000. Okay, you need employees to operate regularly. So there's an operating activity section. Let's see. Okay, transaction 6, that's another customer revenue or cash collection. So we already included that. Then we have transaction 7. So this is where the utilities were paid for $300. So that's utilities. You need that. So that's for $300. There we go. Cash paid for utilities. Okay, negative $300. Okay, transaction 8, Bob withdrew cash of $1,000 for personal use. So nope, we are good with completing the operating activity section. So I can tell that there's going to be a positive amount here. So this is going to be cash provided by operating activities. So we just got to come up with the amount. So 110 minus, let's see, 4,500 minus 300. Okay, that gives us $105,200 if I did this correct. Okay. Now we got the investing activities. All right, so this is where I now got to go back and see about the investing activities. So the only thing I see is the equipment. Okay, the equipment is the only thing that I see. but the equipment shouldn't be there because cash was not sent to get the equipment. The equipment was contributed into the business already. So I'm actually going to put on here 0. Okay, for investing activities. And you all are getting a live recording on this, and I'm not going to edit this out or anything. This is it. So I'm going to put on here, this is cash provided or used from provided by or used from investing activities. All right. Now the last section is going to be the financing activities section. Okay. So I'm going to go back over here and take a look and see where our financing activities is at. So now for the financing activity, we scroll over here. Now, Bob did contribute $20,000 into the business. So that increased the equity there. So, but that's cash that was contributed into the business by the owner. So that contribution of $20,000 is going to be included in funding or financing activities. Okay, so I'm gonna put on here cash contributed by owner, or cash contribution by owner. Come on, Pan. Okay, and this is for plus 20,000. Okay, the next one is going to be a cash withdrawal by owner. So the cash withdrawal, we come back over here. We see that it was $1,000. So I'm going to put in $1,000. This will be a subtraction. Okay, so cash provided by financing activities. That comes out to be 19,000. All right. So if we take the cash balance given the operating investing activity section, so operating activities, it comes out to be, we got $105,200. Investing activities is 0. And then we have $19,000 for financing activities. So we take $105,000 and $200, add the $19,000. That comes out to be $124,000 or $124,200, which is our ending capital balance. Sorry, not capital, cash. Okay, this is our ending cash balance. And so this cash balance is also, or it also matches the balance you see here in the balance sheet, specifically in the cash account. Okay, right here. So I'm going to draw an ugly box here. Yes, there we go. All right. Letting you know it is a financial statement. But notice here that from the income statement, let me zoom in. First off, we prepared the financial statements for Bob's consulting company. So pat yourself on the back there. That's a huge accomplishment. So income statement, we see that we got the net income right here of $105,700. That net income flowed into the statement of owner's equity. So from the statement of owner's equity, we were able to calculate the ending capital balance. And that ending capital balance flows into the balance sheet underneath the equity section. So once we made sure that the balance sheet balanced, everything looks good, then statement of cash flow was prepared. Now, again, this is a simple statement of cash flow. Cash flow statement is very, very complex. All right, so I just simplified it. So we started off with the operating activity section. You see here, the operating activity section consists of $105,200. Investing activities, excuse me. Is zero. And then financing activities. See, I'm talking too much, my throat's getting dry. Financing activities comes out to be $19,000. So you add these two together, that gives you $124,200. Okay, so this is pretty much chapter 1. From chapter 1, within chapter 1, you had to, you get an introduction into accounting, the importance of it. Then you go straight into the accounting equation, what it is about, what is it made up of, and how does it work. So this is where you analyze transactions. And then from those transactions that were analyzed in the accounting equation, you have to prepare the financial statements, because the financial statements is going to tell you a story about how a business is doing. So it breaks everything down from a complex, I want to say, aspect to it to a more simplified, organized way. So you can see here transactions. There were a bunch of transactions. 8 transactions, not a bunch, but pretty much you don't know what's going on. It's a bunch of amounts. You have some accounts here. What am I reading here? And that's where the financial statements come into play to put it in a more orderly way. Just to simplify it, so you can better understand. Oh, okay, the company has generated a net income of $105,700. Okay, I know what revenues are. I know what expenses are. This is showing me the company's financial performance. Statement of owner's equity is just showing you what is affecting the equity account. That's when the owner contributes something, when the owner takes out something, and also when the company does well with generating an income of, in this case, $105,000. Then you have the balance sheet. The balance sheet is pretty much showing you just a snapshot of the company's financial position, that being the assets, liabilities, and equity. Like, how does it look right now? Then you have the statement of cash flows. This is to better manage your cash or figure out where it's going. So when you see a big balance here in the balance sheet of $124,000, that's great. But what is making up that amount? The statement of cash flow is going to show you that. So it shows you the cash from operating activities, investing activities, and financing activities. And that cash balance, I want to say, in theory, should match the cash balance that's shown in the balance sheet. Okay, so that's it for chapter 1.